Hey everyone, welcome to K.AshCapital. I'm about to share with you what stocks are on my watch list and how I plan to trade them. So let's get it. Hey, what's going on everybody? Happy Friday. Today is January 24th. And so what I'm going to start doing now is start doing little short recordings showing what I have on my watch list and how I plan to trade them. And then I'm also going to start rolling out live trades. And since I do more swing trading, I was thinking about recording the entry and explaining what I'm entering, and then just like pause the recording. And then whenever I exit, like have a recording of me exiting it and whatnot and so forth. So it shows the process. But enough about that. I have 4 setups I'm going to talk about right now. I have an income trade or Iron Condor sideways setup that I'm watching in DPZ, which is Domino's Pizza. I have a squeeze setup in Best Buy and STT. I forgot what that one is. And I have a earnings lotto trade for Best Buy as well. And I'll go over all that. So, what's going on first? We'll check out Domino's Pizza. Well, if it wants to go. There it goes. All right. And just to make the process go smoothly, this is what I even got a little checklist right here. So, do we have yellow 10x bars? And you see right here. Yes, we do. Now, the 10x bars, what does that mean? The 10x bars are basically meaning that it's not, the ADX and the DMI is showing a non-direction, meaning sideways. And obviously, as you can tell, it is. It's been in this range since November. So it's just been right here and about right here since November. It's a tight range. So, how am I planning on doing this? Alright, so sideways bars, check. Trading in a range, like I just showed you, check. Now, can we at least get 10% of the premium in 5 days or less till expiration? And I'll show you that here in a second. And then I'll explain these, well, don't know what I'm drawing there, but these 2 lines that I have right there. Ignore the horrible arrows, but yes, those lines, I'll explain those here in a minute. Okay. So yes, it is sideways, trading in a range, and at least 10% premium. And we'll go over that here in a minute. Move that over to the side. And so this is what I have set up. I already have 2 little setups done that I'm looking at doing. So here's 2 different ways you could do this. So the market is supposedly a zero-sum game, right? The higher the probability, less reward, higher probability type of thing. So you gotta ask yourself this. All right, so this one, the 297 to 77 Iron Condor can give you right now 87 cents credit. So you need to ask yourself, do you want to put on a trade? And that is actually 17% return if you get max profit. Now the probability of this is, what am I looking for? There we go. 297, 2775. All right, so break even is the break even on the lower side is 276.70-ish, and then 298.30-ish. Okay, and if you look right here on this particular setup, for 17% return, you have a 60% chance. Basically, you have a 60% chance of getting that 17% return. And then if you go to this area, your break evens are these white lines. All right, so that's break even. It just has to stay right here for 5 days. And it very well can. And then another way you could do this is the one I am more than likely going to trade or place, is this one. This one I could get $1.30 credit, which is 27% return in the 5 days. And in this one, the break evens are at 296.30 and 278.66. Now the probability of this one happening is at that same spot. It is now 50%. So to balance itself out, do you want a 50% chance of making 27%, or do you want a 60% chance of making 17%? It's all up to you. And the reason I'm going with the 50% one is because I take it a step further. This is just probabilities based off of standard deviation. Now let's bring up the technicals. I take it a little bit of a step further. So you have the Bollinger Bands holding the price in, right? So there's Bollinger Band. The Bollinger Band is this white line, so it's holding the price in. It has been in this range for a very long time. And it's bouncing off right here. So it may just go like this, and all you need to do is hold it for 5 days. And so if you enter the trade on Friday, today, like I'm planning on doing it, and then the market opens up again on Monday, that's already 2 days of premium put in your pocket. So that is how I'm planning on trading that one. And to go back to what I'm placing, and that is selling the 295 and hedging it with the 300, and selling the 280 and hedging it with the 275 for approximately $1.30 credit. And if we bring up our little sheet, you can see that it hits all of the criteria to enter. And so what's the plan with this trade? So with this trade, the plan is to hold it, cover half at 50%, and then cover the last half around 80 to 90% return, or 80 to 90% of the credit received. All right, let's move on to STT. All right, this is a squeeze play. So basically what a squeeze is, it is when the Keltner channels get inside the Bollinger Bands, and that's basically compression. It's energy getting tighter and tighter and tighter, and then you're just waiting to explode in one direction or the other. That is how a squeeze works. All right, what's our criteria? All right, green 10x bars across multiple time frames. Let's look. So there you go. So the 1 day, 2 day, 3 day, 4 day, weekly, monthly, so on and so forth are all green, meaning the ADX is showing momentum to the upside. And if you cruise on back, you can see we have been in an uptrend. All right, so green 10x bars across multiple time frames. And then the next one is it must be in the squeeze for greater than 5 days. So now how we've done that, the squeeze is right here, identified by these red and white dots. White dots are low compression, red dots are mid compression. So right now, we've been in a squeeze for a week or two, about 2 weeks. So yes, boom, in a squeeze. And then after I just go through them all, then I'll show the checklist. That'll just make it easier. All right, next criteria is 8 and 34 EMA stack positive. And that is a, let me change color of my marker. Yes, so 34 EMA is this orange, and the 8 is this light bluish one. So yes, they are stacked positive. The 8 is above the 34. Now is VWAP stacked positive? As of right now, no, it is not. I swear I looked earlier and it was, but no, VWAP does not stack positive. But that's one we just keep an eye on. It might change for the day. It might have gone red due to this recent decline. And you can see it's hitting the 34 EMA, closing on a hammer, and then more than likely may go up. And whenever I looked at this earlier, it's also in a 30-minute squeeze, so it very well continue higher. Anyways, and then price is near the 21 EMA, and it is just below it. So check. Almost checked them all. All right, next one to pull up is this one. Okay, the stock, is it in the buy zone? Answer is yes. So the buy zone is between these right here, these two lines. So this white line is a 21 EMA. And then these purple pinkish ones are, that's a Keltner channel of 1 ATR. So that is 1 ATR down and 1 ATR up. And then here is 2 ATR, 3 ATR, up and down, so on and so forth. So we are in the buy zone. So the plan is, if it does actually confirm to move higher, buy some calls at probably the 60 to 70 delta. Up here at 85.50 to 3 ATR is my target, and the stop is right here at the 2 ATR. So I hope all that made sense, but that is the setup on STT. All right, the next one is Best Buy. I got two setups on this one. I entered this yesterday, but the setup still looks good, so I thought I'd go ahead and throw it in here now. And then everyone can see what's going on. So same thing. Oops, I forgot to show you all this at the end of the last one. But anyways, on STT, on this little checklist, on STT, it had all of them, not that one, and this one. So we'll keep an eye on it and see if it's still worth entering at the open. All right, now time for Best Buy. So green across all time frames. Let's see. Yep, green across all time frames, or the greater time frames anyways. We have green ADX bars. Now is it in a squeeze 5 days or greater? Yes. It's in a low compression squeeze. So we could zoom in on this bad boy. And the momentum, since it's up here blue, that means momentum is above 0. So momentum is to the upside. The ADX is to the upside, momentum is to the upside. It's in a squeeze, and it's consolidating. All right, this one, or this chart. Now continuing on. The 8 and the 34 EMAs are stacked positive because the 8 is above the 34. The VWAP is stacked positive. And basically what stacked positive means is right here where it says D, W, and M. So that's daily, weekly, and monthly. So it's saying that the weekly VWAP is stacked above the daily, meaning basically means that it's having the VWAPs are overall stacked on each other, and then it typically means a lot of pressure is pushing it up. All right, stack positive, and it is near the 21 EMA. The 21 EMA is this green line right there. Oops, let me turn off that pin. Sorry for all that clicking back and forth. That pin is still trying to figure that or get in a groove of using it. All right, here's still Best Buy. So it is indeed in that buy zone, and we already know we have the squeeze, so the plan is to buy near this zone. Our stop is 2 ATR down, targeting 3 ATR up and above, and if a squeeze does trigger and is triggered by these green dots, when that happens, that is when it fires. And if it fires, it typically goes from 8 to 10 days, and when it's triggered, you see it's by these light blue lines. That's the momentum and the trigger going up, and then you exit when it turns dark blue. So in Best Buy, I actually bought, let's see what I actually bought. I have the February's 2750s, and I bought them for $3.90. All right, so that's the two squeeze setups. And then as I was looking at Best Buy, as I'm sure most traders do, you look for earnings. Since it's earnings season, it's over here at February 27th, before market open, right? Actually, before I continue on, let me go ahead and pull this over, and I'll show you this real quick, because that's why I even typed this thing up. So we had the green bars across the multiple time frames. It wasn't a 5-day squeeze or greater. The EMAs were stacked positive, the WAP was positive, and the price was near the 21 EMA. So all that puts in favor that the squeeze is going to fire higher. So all you do is hold on to the squeeze or into the position while the squeeze fires, and you ride it up. So that is how that strategy works. Now for the lotto play that I was just talking about. So I saw abnormal open interest on options whenever I saw this with my scanner, so I was looking at it, and then like I said, the earnings are on February 27th, and so I was at the options chain, and so right here, and I was like, okay, looking at calls to buy, and then I always look over here, I'm like, okay, how high is the implied volatility for the earnings? And then this is what I noticed. So if you look, and this is what I did on a Walmart trade too, which was also a positive trade. So as I was looking at this, you can notice one thing that stands out on the put side. It doesn't stand out over here on the call side. Or even if I was to scroll down, it doesn't even stand out. So what this tells me, after earnings, there's no one, that's really big, that's what she said. Can I say that on YouTube? Oh well. So there's very little open interest right there, right, on the call side. And this is the day after earnings. Go to this side, on the put side, there's something that stands out to me. It looks like someone has put the money for earnings to go negative, or let the stock go negative. If you're familiar with the butterfly, so this is the butterfly setup if you look down here. So what you do is you sell one strike, sell two, and then buy one. So basically this is the body and these are the wings. And the reason I believe that it is a butterfly, because it looks like someone right here at the $85 strike. Someone sold 4,000 option contracts and then bought 2,000. And then, ironically, it's very symmetrical. Go down here at the 88. So there's a $3 wide butterfly right after earnings. So no, that doesn't happen too often, because if you look, and especially on a weekly expiration, that doesn't happen very often. So what is the lotto trade? So I plugged the position down here. So if as a lotto trade, so basically what you do in a lotto trade is you put as much money in as you're willing to lose, because you don't know if it's going to happen or not. I mean, particularly, I'll throw $250 at this lottery trade, expecting it to lose. So if you look down here where it's the blue line, or the blue date, which is also this line right there, if you look right there, it says what your profit and loss is at expiration. So right here, so we'll get in for 250, so it's a loss, right? But earnings happens. Markets, or the stock price, always moves after earnings. But so if you risk 250, you have the potential of making almost $2,700. You'll never pin it at the middle, so even if you didn't even nail it, you could come out with a $2,000 winner. Say you didn't want to put all that money. Say you have a very small account. If you have a small account, you can risk $25 to make almost $250 or $200. So it's really up to you. If you want to be really crazy and you have like a really big account, throw $1,200 at it and make about $13,000. I mean, the choice is yours. But me particularly, I'll probably throw 10 at it, $250 to make about $2,000. So that is the lotto trade. Just risk a little, make a bunch, and that whole trade is purely based on the abnormal open interest as right there. Well, anyways, that's the the 4 trade setups I'm watching for Friday morning. Good luck. Enjoy your weekend. And don't forget to subscribe, comment, tell me what you'd like to see. I'm open to anything. All right. Thank you. Take care, everybody.